Preparedness takes capital. So worry about getting capital before you worry about anything else. And remember, too, that the biggest risk you face is yourself. The biggest risk isn't Putin. He doesn't know you exist. The biggest risk isn't Xi. He doesn't know you exist. Biden is a bigger risk than either Putin or Xi because he does know that you exist and he has direct lines on your pocket. But don't be afraid of Biden either. Don't use your fear of the unknown as an excuse not to work your ass off today for your betterment and your preparedness. Your biggest risk is you.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always glad and privileged to have this returning guest. Rick Rule is the CEO of Rule Investment Media, formerly of Sprott Asset Management. He joins us this Tuesday, August 9th, 2022. Rick, thanks for coming back on Liberty and Finance.
Always a pleasure, Dunnigan, although I have to admit I enjoyed speaking to you in person a couple of weeks ago after, two and a half years of this sort of Zoom discussion that we've been enjoying.
It was great. It was great to see you. I mean, it was just, I don't even know. It was almost surreal to be sitting there in the conference center at the Boca Raton Resort and seeing Nomi Prinz, Jim Rickards, Robert Friedland, people walking down. It's just like amazing to see the CEOs of all these companies, that many of whom I've interviewed on our channel over the years, and to be able to walk up to them, introduce them to the family, and meet them up close and personal, as well as see you again, since I hadn't seen you in person since your office in Carlsbad, California, more than a couple of years ago. So it was really a treat, and the sessions were just smashing. And in fact, we were going to talk a little bit about that today. In fact, I wanted to ask you a question about that, and I'm sure that I'm not the first person to ask you this, so maybe you already have your answer. But that is, you've been at this longer than most. You often remind us of your decades of experience. But one of the things about that is every one of these conferences must bring out some things that even you are surprised by, or that really stand out to you. Could you talk to us about something or some things that surprised even you at this conference?
You're talking about by way of information?
Sure.
I would say that the real standout talks included, of course, Robert Friedland, who talks about the inevitability of shortfalls in metals like nickel and copper as a consequence not just of electric vehicles, but rather as a consequence of increasing living standards in the world, increasing electrification, the increasing well-being of humankind, and decades of underinvestment. It's a story I myself have been telling, but Robert tells it so well, and he tells it with such an international viewpoint. The absolute inevitability in higher, even real, not just inflation-adjusted terms, for the basic commodities that we use to live, I think was probably the most important theme of the conference. Grant Williams is always also a superb commentator. I'm always embarrassed when Grant Williams outpolls me as best speaker at my own show. The audience usually, of course, is predisposed to me, but Grant is just brilliant. And Grant has the ability with humor to poke away at the disconnect between politics and the economy, poke away at the absurdity of long-term savings products yielding 3% in a world where the purchasing power of the currency that the payment is being made is declining at 9%. In other words, the idea of a minus 6% real rate of return being attractive to investors. I thought that was very useful, but probably the most useful thing to me was to walk around an exhibit hall where there were 35 companies in an industry that's been enjoying no love in terms of securities pricing, and finding companies that are doing an absolutely superb job in adding value for their shareholders. I was interested too in an attendee base that, despite the fact that, as an example, the Toronto Stock Exchange Venture Index is off by 60% in 18 months, to find an extraordinarily engaged audience, an audience that really paid attention to my admonition to go to the workshops and work, to take notes, to visit with the exhibitors, because making money on the exhibitors is really where the rubber meets the road in the conference. So I was pleasantly surprised by all of those pieces of information or circumstances, or however you might wish to describe them. I thought, by the way, your colleague, Andy Schechtman, gave a wonderful speech, too, about the individual benefits of precious metals ownership in a world where other financial alternatives, viable financial alternatives, are becoming increasingly scarce.
In that environment, you've talked to us several times in the past about, we've had talks entitled things such as "When I Will Sell My Gold" or things like that. You've talked to us about the underlying principles of negative real interest rates, debts and deficits, etc. There's a question about the action. A lot of people are talking about the actions of the Federal Reserve versus the direction of interest rates. Since you mentioned that as one of the underpinning negative real interest rates as one of the underpinnings of what makes an intrinsically worthwhile asset of interest to you. Gerald Lee asks, would a gold-backed currency eliminate interest rate risks and policy tools?
From a theoretical perspective, yes. But a gold-backed currency, a gold-backed official currency, will never occur. It's easy to understand why. People are attracted to politics because they're attracted to power. They want to be the arbiter between the ambitions and the wants and needs of other people. A gold-backed currency limits the ability of the politicians to counterfeit. It limits their ability to spend money and leave the bill for future generations. Anything in politics that limits the power of politicians is a non-starter. So, while yes, from an academic point of view, a gold-backed currency would eliminate the interest rate risk. But the probability that a gold-backed official currency would ever exist is, in my humble opinion, nil. Now, I need to say that I've begun to work on my mind a bit, in the sense that I used to calculate my income and expenses, my balance sheet and my financial statement, my statement of earnings personally, only in dollar terms. I've started to calculate my own finances on, if you will, a separate ledger. And I now, in addition to measuring my net worth, my debts, my incomes, and my expenses in dollars, I measure them in grams of gold. So in a sense, Dunnigan, I've devolved a little bit to my own personal gold standard. Gold can be a private currency. And I suspect that with the work that the World Gold Council, the Silver Institute, and others are doing, that utilizing blockchain and distributed ledger technology means that increasingly gold and silver will become real currencies again, simply not sovereign currencies, simply not government-backed currencies, but rather private currencies, which is what they were always intended to be.
Yeah, privacy is one of the casualties of the information era, it seems, unless we do specific actions which are countercultural to try to preserve the shreds of privacy that we have left. Again, you've talked to us in the past about maintaining cash liquidity, bullion liquidity, and this idea of being prepared for opportunities or potential crises. Never know. And it echoes the roots of our channel about preparedness. There's a question here about preparedness. Gary Farmer is contrasting gold and silver and the value of accumulating those versus other more utilitarian assets. He says, I have no use for gold or silver, can't eat it, no merchant accepts it as payment, unlike fiat currency, which is acceptable around the world. I'm buying spare parts, batteries, tires, nuts, bolts, food, water, shelter, brass, lead, and the means to deliver it, clothing, shoes, boots, gloves, etc. Can you talk to us briefly about what role, with an eye towards preparedness, towards the unknown opportunities or risks that lie ahead, precious metals or precious metals related equities may still hold in someone's planning?
Big question. First of all, I like parts of the questioner's strategy, which is to say, diversifying his savings into non-traditional assets, which he believes might have value and which he might be able to exchange for other items of value which he may need in the future. I think that's a perfectly viable strategy. I'm for any form of savings, Dunnigan, as long as people save. I remember early in my career having to go to a lot of frontier markets to look at natural resource projects. And the way people saved, if they were afraid of the currency, varied. In Africa, as an example, people would buy spare sheets of steel roofing, knowing that their currencies were ridiculous, knowing, too, that storing food meant that the food deteriorated over time. So from the first thing, storing items, if you feasibly can, that have value, where in particular you know how you might be able to market them, is a viable form of saving or speculation or a business. It's an unlicensed store, not a bad thing. Gold and silver are a good thing too. I regard them as liquidity, but they are volatile liquidity. The holder of liquidity in gold or silver must make a deal with himself right now that if the nominal value of the gold and silver falls, but the price of other assets that he wants falls more, he or she will be willing to sell the gold and silver, despite the fact that they're down in nominal terms, to use that liquidity to buy other assets. If the holder of gold and silver isn't willing to use gold and silver as liquidity, it is not, in fact, liquidity. It's important to understand that. The questioner notes, too, that for practical purposes, in terms of day-to-day transactions, that fiat currencies work better than material goods and gold and silver. And I agree with that, too. But I still understand the value of gold and silver for part of someone's liquidity to the extent that more conventional assets are falling in nominal terms faster than gold and silver. I continue to hold most of my liquidity in US dollars for the simple reason that it is the most interactive form of liquidity in the world, which is to say it is the most liquid of the fiat currencies. And it also is the currency that denominates the economy that I live in. I understand perfectly that I'm buying a U.S. 10-year treasury yielding, 3%? Which means that my purchasing power is declining by 6% compounded annually. I consider the negative real interest rate as an option premium so that I can have the cash to take advantage of any dislocation, or to use your words, to be prepared for any dislocation in capital markets, a circumstance, a liquidity crisis, a crisis in confidence like we experienced in 2008, could mean that shares in businesses that I would like to buy would fall by 50 or 60%. Having the ability to take advantage of that situation rather than being taken advantage of by that situation is one of my own definitions of preparedness.
In the conference, most of the discussion I recall revolved around three main topics. I'll just take a stab at this. I would say gold, silver related topics, as well as sort of the global financial, reserve currency, that sort of thing. But other resources, including platinum group metals, base metals, etc., were also mentioned, and it's inherent in a lot of the mining operations of some of those companies because that's the way nature put them together, so that's the way they're pulling them out. So there's a specific question here from Twist Twister who's saying, platinum, its future, is it a buy?
Is it a buy? It depends on for who and why. The speculative appeal of platinum is the specter of taking advantage of political risk. Platinum is produced in size in 3 countries. South Africa, a basket case politically, and getting worse. Zimbabwe, which makes South Africa look like a good investment destination. And Russia, with whom we are in a proxy war. If you understand that platinum group metals are essential for many, many, many manufacturing processes, but particularly catalytic technology around internal combustion engines, you know that any political disruption in the supply of platinum and palladium could and would send the price soaring. Will we experience political disruption in South Africa, Zimbabwe, or Russia? And if so, when? I do not know. But the speculative appeal of those metals has to do with the fact that they could easily double in price without it, in the 5-year time frame, changing demand whatsoever. The upside in platinum and palladium is alleged to be the new hydrogen economy. The necessary catalyst for, as an example, fuel cells, the thing which turns hydrogen into power, is platinum and palladium, platinum group metals. I don't have enough knowledge myself in the technology or the economy or the politics of the technology to understand if we're actually going to go into this hydrogen economy. So for me, the utility on a net present value basis that matters to me is the utilization of platinum and palladium in internal combustion engines. That's a long way of saying it depends on the outlook of the questioners. I personally own physical platinum and palladium through the Sprott Physical Platinum and Palladium Trust. I used to own it in bar form, but the liquidity and the inconvenience of owning it physically at my age, 69 years of age, was such that I defaulted to owning it by proxy on the New York Stock Exchange. And I own it particularly because of what I see as the possibility of social disruption in one of South Africa, Zimbabwe, or Russia, which would, if it occurred, send the price soaring. I need to say, too, that my platinum exposure, both by way of equities and by way of indirect holdings of physical precious metals, probably is 1.5% of my total portfolio. So I hold it as a fairly small percentage of my total portfolio.
You've just touched on a whole bunch of important topics, of which there's like 3 I wanted to key off of. One of them is about the Sprott Physical Funds. Henry Padilla asks, adding to physical precious metals, but want to know the pros and cons of holding Sprott Physical Funds such as PHYS, the gold fund, and PSLV, the silver fund, in my IRA as well.
Well, from my particular point of view, understand I'm conflicted. I'm the largest shareholder of the manager of those funds. And to the extent that people hold their assets in those funds, I indirectly benefit. For U.S. taxpayers and for U.S. investors generally, and by the way, I don't give tax advice, my own decision was to hold the Sprott funds simply because holders of physical precious metals directly, when, as, and if they sell, are taxed at the collectibles or ordinary income tax rate. And holders of a trust, indirect holders, are taxed at the capital gains rate. I'm a patriot. I believe in paying less tax. I believe in starving the beast. I'm also practical. I'd like to keep more of what I earned and surrender less to the government. I'm also attracted to the fact that the Sprott Physical Trusts trade on the New York Stock Exchange for spreads that are often as small as 12 or 13 basis points, which is to say that the The spreads involved in physical precious metals ownership are usually larger than I would like to bear, particularly for metal that I intend to hold for less than sort of 7 or 8 years. So for me personally, I want to be in tax-efficient products that are simple. Other people feel very differently. People who have an even more skeptical outlook as to the stability of American politics and sociology don't want an indirect holding in these assets. They want a direct holding in these assets. My personal belief is that I pay enough attention so that to the extent that the underpinnings of the American financial system were beginning to be in real danger, I could liquidate my indirect holdings. But time will tell if that is true.
That keys right into the next one I wanted to talk about, and that's from Kevin Roy, BSN, who says, will a, quote, bail-in affect brokerage firms and banks alike? Stated another way, is currency safe with a broker? So again, people who watch our channel are aware of the Dodd-Frank Act of 2010 that makes depositors in banks unsecured creditors to the banks, et cetera. Do you have any comments, since you're discussing the potential strategy that people should consider of holding assets indirectly through brokerage accounts and ETFs, that sort of thing? Is currency safe with a broker, and does that introduce additional counterparty risk that they should be factoring in?
There are risks to many forms of cash ownership. There are greater risks to not owning cash. When you look at the range of risks that you face, every investor in the world must realize that the greatest risk that he or she faces is conveniently located to the left of the right ear and the right of the left ear. So consider your risks, because you are your biggest risk. Now moving directly to the question. It's going to become increasingly important, I think, for depositors and holders of all forms of assets to understand that the government guarantee around various institutions is becoming less and less real. And I think it's incumbent on the investor himself or herself to begin to segregate, differentiate between the institutions that they trust. When way back in 1992, when I formed the brokerage business that became Sprott U.S. Holdings, I examined 16 clearing firms which would hold accounts for my clients. There was only one clearing firm that had a balance sheet that I understood or trusted. And I think that investors, despite the fact that it's tedious work, need to come to understand something about the solvency of the people that they trust their cash and securities assets to. The Federal Deposit Insurance Corporation, of course, guarantees accounts up to $250,000 per account in institutions. I'm becoming, I need to say, for the near term, I feel fairly comfortable with that guarantee. Remember that the government can counterfeit. They can print up any number of currency units that they want.
Yeah, I think that's related to a direct quote, and I can't remember which Federal Reserve, was it chairman or where it was one of the presidents, who said, will the Social Security Fund fulfill its obligations? He said, well, you'll get paid out in nominal terms, but what that'll buy you is undefined.
Correct. So, I think people need to understand that. But I think, too, that people need to pay more attention to the solvency of the institution, irrespective of the guarantee. The FDIC considers a well-capitalized bank to be a bank that has equity assets of 7% of the total balance sheet, which is to say that they think a well-capitalized bank can be leveraged 12 to 1. And when examining the nominal value of the assets, the unimpaired assets in the bank, the FDIC is much more generous than I personally would be about the difference between the nominal and the expected value of things like long-term derivatives. So when you see very large banks, the sort of JP Morgan Chases of the world, the Citicorps of the world, with $50 or $60 trillion in nominal value of derivatives, secured against a balance sheet that is 7% of on-balance sheet liabilities, that to me isn't adequately capitalized. Now, I'm in the process, as you know right now, Duncan, of backing my 7th startup bank. And I'm of two minds of this. I deal with the FDIC or people in the FDIC every month. And the individuals in the FDIC, I find myself uniformly liking. I meet these young regulators from the Office of the Comptroller of Currency, the Fed. I mean, even saying the Fed makes me shiver. And the FDIC. And so while I'm deeply cynical about those institutions, I find myself liking and respecting the people that work for them, not just because I'm in organization, but because I'm dealing with them. But the precept around these organizations, I have increasing difficulty with. Even though these young people that I deal with at the FDIC, I think are extremely smart. By the way, honest and hardworking, good people in their own regard. I don't think that they have the regulatory skills to say that a bank with 7% of equity is adequately capitalized. In other words, I don't think that they can adequately regulate a business that's leveraged 12 to 1, particularly when there are so many GAAP accounting discrepancies as to the valuation of assets and the need for the provision against loss on those assets. It is, and this is a blatant commercial, Donegan, one of the reasons why I'm backing Frank Trotter to start another bank. While the FDIC says as a depositor that I should be happy to accept a 7% equity slice against my deposit liabilities, the depositor in me feels like 10 is a much better number than 7. And so, I have a personal stake in the question that you just asked.
We've got this question also a few moments ago when you were talking about platinum, palladium, and so on. You were talking about jurisdictional risk. We've brought up that topic with you several times in the past, and you've reminded us that all jurisdictions have risk because they all have governments. But there's a specific question here, if you could weigh in on from what we know now that we didn't know then. Mikey Riley says, I'd like Rick to comment about Americans who bought Gazprom stock and if the shares simply evaporated at the behest of Wall Street bankers.
Well, the Gazprom shares, they won't evaporate. But they could become further impaired. I doubt that the cause of the impairment would be Wall Street bankers, frankly. There are a few things that could happen to the Gazprom shares. There could be deepening sanctions against Russia by the United States. There could be retaliatory measures by the Russians against all forms of Americans. One scenario might be that you and I would be precluded from holding Gazprom. Not by the Russians, but rather by the Americans, in which case we would have to sell that stock. If all of us were selling at the same time, it would obviously have a deleterious impact on the price. For those who chose to do things differently, as an example, Americans right now can open accounts at Gazprom Bank. The Russians love to tweak the U.S. government, so they're allowing U.S. citizens to open accounts at Gazprom Bank. You could transfer your Gazprom ADRs into Gazprom Bank, convert them into Gazprom ordinaries, and own that Russian stock in Russia as an American. But if relationships continue to deteriorate between the United States and the Russians might have an incentive to force you to sell that stock to some of their cronies. Remember that Russia is, like the United States, really a fascist crony capitalist state. And the idea that they might victimize tens of thousands of Americans on behalf of 20 or 30 Russians stands to some reason. So, yes, the truth is that holders of all Russian stocks, including Gazprom, face a variety of unsavory and uncertain risks. By the way, I'm fairly prominently among them.
Following on the question that the other viewer had asked about the potential for bail-ins of brokerage accounts, there's an even more all-encompassing question that has more to do with the preparedness topic that we asked about earlier. William Mueller says, Rick, how about a worst-case scenario that we live in an era where there is total upheaval throughout the world? How do we prepare, and are you prepared for this possibility?
I'd prefer not to discuss my personal preparedness, although I do have some contingency plans for things getting worse than I might otherwise expect. And the truth is that there's no way of telling how bad things might get or where they might get, or where they might get bad. So the first part of my answer is I don't know, and nobody knows. One thing that for sure you should do is not pay some more on $5,000 to do a preparedness plan for you when he or she doesn't know anything about the risks that you might face. I suggest that the steps that were outlined in that wonderful underground pamphlet available online, PT had. PT, depending on how you choose to define it, was perpetual traveler, professional traveler, or prior taxpayer. And it involves internationalizing it. Our mutual good friend Doug Casey once said, your assets, your ass, and your passport should have 3 different countries on them. The idea being that you may or may not be able to choose a domicile that will be problem-free. But if you have 3 of them, you have 3 times the chance of doing the right thing. I need to disclaim the fact that I think that the probability of things going that wrong is extremely low. I'm an optimist. I think we get through all this idiocy. I don't think we get through all this idiocy unscarred, but I do think that we get through this idiocy. I remember asking the same sort of question of my grandfather in 1967 or 1968 when I was a teenager, and where as I became aware of inflation, I became nervous about it, but where also you'll remember this country in 1967 or 1968 with civil disturbances, racial disturbances, the fact that I, as a young kid in California, was preparing to go to university where I might have to wear a gas mask to get to class. And I remember that as a 16-year-old, this had sort of a profound impact on me. I remember talking to my grandfather about what I should do and how I should prepare. And he said, you need to remember that every generation has had these challenges. My generation had a few challenges, little things, the Depression, World War II. You do the best you can, but you get ahead by being an optimist. You don't get ahead by being by being a pessimist. If you go down to the coast and you look at those big yacht harbors, has been pointed out, the pessimists don't own any of those yachts. And the pessimists are the ones who aren't prepared at all. Preparedness takes capital. So worry about getting capital before you worry about anything else. And remember, too, that the biggest risk you face is yourself. The biggest risk isn't Putin. He doesn't know you exist. The biggest risk isn't Xi. He doesn't know you exist. Biden is a bigger risk than either Putin or Xi because he does know that you exist and he has direct lines on your pocket. But don't be afraid of Biden either. I can't tell you, Dunnigan, how many people I've talked to who said, what's the point? If I do something, Obama's going to steal it, or, Clinton's going to steal it, or Trump is going to do this. Don't use those people as an excuse to fail. Don't use your fear of the unknown as an excuse not to work your ass off today for your betterment and your preparedness. Your biggest risk is you.
That is a perfect lead into our last question. This is the last viewer's question. Then I'm going to ask you about a brand new thing you've got that's a spin-off from the conference before we wrap. This last viewer's question from Christopher Bick says, Dunnigan, if you could ask Rick how I could permanently borrow about 20 of his IQ points so that I could follow along without having to listen more than once. Brilliant, man.
That's very kind. Dunnigan, as I've told you in the past, you are welcome to pick my brain if you use a very small fork.
Well, now that leads us to our last topic, and that is just having come off the in-person conference in Boca Raton, Florida, you didn't divulge to people who, like myself, who attended the conference, that there'd be, but yet there's more. So could you talk to our viewers, both those who were able to attend the physical conference and those who were not able to attend the conference, what that more is and how quickly it's coming up here?
Dunnigan, following the success, which thank you for contributing to, we enjoyed with the uranium boot camp some months ago, we've decided that we're actually pretty good virtual conference presenters. One of the things that we really enjoyed about the uranium boot camp is that investors from 33 countries who would have been unable or unwilling to attend a physical conference were able to attend virtually. The consequence of that is that the live conference, which we had at Boca Raton, has gone virtual as well. There were certain aspects that, as a consequence of having a lack of time, we weren't able to do in Boca Raton. So we're having a virtual conference, which will feature almost all of the recordings from Boca Raton, but will feature several interviews that we didn't have time to do in Boca Raton. In particular, they will feature, I think it's 35 interviews by me of every exhibitor, every public company exhibitor at Boca Raton. One of the things that I've noticed in 40 years of investment conferences is that most CEOs of major mining companies don't know how to give a coherent presentation. It isn't that they're bad people, it's that they're too busy running the company. They're too busy telling the story from their point of view. They don't understand well enough the mechanics of getting the story across to an investor audience. At the same time, most investors don't think that they have access to CEOs. Most of them are too polite or too nervous or too something to go up and ask direct questions. So in order to facilitate the exchange of information from the investors to the CEOs, I took it upon myself to interview every single one of them in terms of getting them to talk about the information that I think is important for high net worth retail investors to make a rational investment decision. You can learn several things from these interviews. Among other things, you can learn how to interview yourself, because the idea that these CEOs aren't approachable is ridiculous. A good CEO wants nothing more than to talk about his or her company. It's their whole life. Think about asking a grandmother if she'd like to talk about her grandchildren. I mean, this is a no-brainer. But most people, nonetheless, don't have enough experience to know how to ask the questions. So watch these interviews with the point of view of learning how to ask the questions. Watch these interviews, too, because these are carefully selected companies. Remember, Dunnigan, the qualification to exhibit at most investor conferences is a check that cashes by the exhibitor. At our conference, our attendees have told us that the exhibitors are content, too. That means that we have to vet the exhibitors, and we vet them very simply. We don't let them exhibit if we don't own them and or do business with them. This doesn't guarantee, sadly, that every exhibitor there has a share price that will rise, but it does guarantee that we know them well enough that we own them. So this is a very carefully curated group of exhibitors. It's important, too, for the people who attended the conference physically to realize that they have lives, and much of what they will have heard at the conference and written down, partially at my instruction, will be forgotten in the 6 weeks between the conference and the time that the virtual conference debuts on August 12th. The point of that is that the virtual conference will be up for 6 months. Don't watch it once. Watch it 2 or 3 times. If there's a speech that made some sense to you, write down the part that makes sense. You believe that you're going to remember what you were told forever, but you're not. The paper boy is going to miss a throw and put a paper through your front window or something like that. There's something that's going to occupy your mind and throw away the information that was of value to you. Refresh your memory by taking notes. Refresh your memory by replaying the virtual conference. For those who weren't able to attend the conference, for whatever reason, the virtual conference is available to new attendees for $99. Like every other investment product I have ever offered in 30 years of offering up investor education products, if you don't believe you got your money's worth, email me and I'll give you a full, no questions asked refund. Very interestingly, Dunnigan, on the uranium boot camp, The refund requests we got, which were less than 0.5% of total attendees, involved requests for refunds around the fact that the information presented was too sophisticated, which is to say that the user didn't have the ability to assimilate the information presented. Now, of course, we gave that person a refund because that person did not get the value that we charged them for the seminar. But it's important to note that the complaint was that the content was of too much value. And as a consequence of that, the listener requested a refund. So one more time, wonderful exhibitors, world-class speakers. The fact that we had, 6 or 7 living legends who built billion-dollar companies, multi-billion-dollar companies from standing starts is worth the $99 alone. But if you subscribe and if you didn't think you got your money's worth, email me and I'll give you your money back.
Just to let people know, it couldn't be easier to register for that. Just look in the description of this video, folks. You'll see a link that allows you to register. You'll also be supporting our platform at the same time and helping us keep on the air. Rick, also in the past, you've offered to rank people's natural resource portfolios.
Yeah, I have lots of things to offer your listeners now. The first is, of course, the rankings. If you think that my opinion as to investments is of general value, I can make it of specific value. Go to ruralinvestmentmedia.com, enter your natural resource stocks. Please no pot stocks, please no crypto. I will rank them 1 to 10, 1 being best, 10 being worst. I will comment on individual issues where I think my comments might have value. In addition to that, I'm increasingly going to be active in private placements. Now that the share prices in junior resource stocks have plummeted so far, I'd like to reallocate capital to them. Any investor who is accredited is welcome to follow along with what I do at no charge. I will distribute information on the placements I'm participating in. Note that you may or may not be able to participate alongside me depending on the company's choice. But I will give you that information for free. In the question or comment section on the rankings page, just say placements. Finally, despite the fact that I'm in retirement, I'm backing guys starting a new bank. If you'd like information on being a customer, or if you're accredited, a shareholder of my new bank, if you'd like to be part of a bank that has money in it, lends against good assets like physical gold or silver, in the question and comments section of the rankings page, write bank. So rankings, placements, bank.
Excellent, folks. You'll also find the link to that ability to get Rick's reflections on your natural resource portfolio and these other offers that he's doing in the description of this video. And one more thing is just to remind everyone is if you go to libertyanfinance.com, put in your name, your email address, click submit, and then confirm when you get your email, you'll be on our all free, did we mention free, mailing list that gives you links to every one of the interviews that we put out, every one of Rick's interviews, as well as all of those CEOs of the various companies that we are bringing on for your education, as well as all of our other interviews with experts on preparedness, finances, etc. They'll all be showing up in your inbox, but only if you sign up for free at libertyanfinance.com. Rick Rule, CEO of Rule Investment Media, as always, thank you for joining us here on Liberty and Finance.
Donegan, thank you for your ongoing support, both of your own channel and my own efforts. Thank you, too, for bringing your family down to the Investment Symposium in Boca. It's lovely to see participation in a family business extend down now to your sons. It was really heartening to see, and it was nice to see you.
Yeah, and frankly, thank you. And it was great to meet you in person and introduce you to the whole family. But there were also several CEOs and others whom I was able to introduce to the family. And that was striking that the accessibility, the open person-to-person connection was there just as well. And that was something that many people might not anticipate. They might feel intimidated, and there's no reason to. So thank you for pulling everyone together, and looking forward to another one.
If you might indulge me in one little story that brings up. I was talking to Robert Friedland out in the sort of central core, and a man walked up and said, Mr. Friedland, I want to thank you, and I want to thank Rick, too. When Rick was my broker, he introduced me to Ivanhoe Mines, and that one stock position made me $1 million. And Robert almost cried. Robert threw a hug around this guy and said, "You made my whole week. Thank you so much." The idea that these CEOs, even billionaires like Robert Friedland, are inaccessible and don't have human emotions is wrong. And so bear that one story in mind when you're thinking about human relationships and thinking about your portfolio.
Very good. And it was a real pleasure, Rick. We're looking forward to having you back here as soon. But we'll also, remember, Rick said August 12th. That's coming up this Friday, right?
That's correct.
So it's a special online event, and you don't want to miss that, folks. So don't delay. Don't come back 2 weeks from now saying, where's that thing we were supposed to get ready for? It's now. Now, look in the description of this video. Sign up for the online version of the symposium. So, Rick, thanks for being here.
As always, thank you, Dunnigan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.